What's happening, guys? Welcome to this video. So in today's video I wanted to talk about, again, we've talked about it in a previous video, but I want to just kind of reiterate my point on why prices are going to decline the most in places that have seen the biggest rise. And I'm talking about suburb places like Parksville, places like Nanaimo, which is just over there, places like Windsor, Ontario, places like London, Ontario, all these little suburb places that have just boomed since the pandemic started on housing. And we're going to dig through why that isn't going to stick, guys, and why it's something you need to watch for a catalyst which is going to affect the rest of the housing market. So without further ado, guys, let's do this. All right, guys, welcome back and welcome to the beautiful beaches here in Parksville, British Columbia on Vancouver Island. Vancouver Island is a lovely place that I'm always visiting because we just think it is just an amazing place. And quite frankly, one thing which is just so amazing here as well, well, not actually amazing, but kind of stupid, is the housing market. So in this video, I want to talk about the housing market, you know, the housing market in these little pocket places that have seen huge increases in prices over the past 12 to 18 months and why those prices are going to go down. So I'm going to keep this real simple, guys, because there doesn't need to be an overcomplicated explanation of this. So basically, if you've got prices moonshotting within a couple of years, then that means that all the people that own the majority of the housing stock in the area are probably owning at the lower price point, okay? Especially if you go and look at housing prices historically to see what they were before that, that's really going to give you an idea of how much equity people have in their homes and then how much housing prices are likely to decline. So there are two main factors which I look at. One is economic strength. The other is the underlying housing market and how rapid the price increases have gone up. Now, the fact is, there is not much of an economy here in Vancouver Island. There really isn't. Jobs are fairly low paying. The type of people that come to the island in mass are really actually people looking to retire, looking for that slower pace of life, and looking for a more mild climate. Although my hands are absolutely freezing, I'm not too sure about the mild climate. But the thing is, guys, people move here for that reason. And then you have the other side, which is the people who work and live on the island, which make up the vast majority of residents here when you look at population and census statistics. So the thing is, guys, basically what I'm saying is, like, let's say housing prices go down 30% in Nanaimo, but they're up 50% year on year. How is that going to take place, and how could that happen really rapidly? Well, it can happen really rapidly for a couple of reasons, but the primary reason is the fact that housing prices were lower before that lead up, which we have to remember was because of low supply. People keep forgetting this, and this is why low supply is so kind of crucial when we discuss housing bubbles, because there has been low supply in the housing market, and when there's low supply, that means there's not as many homes available to buy. So the thing that happens is people buy piece of garbage homes that they wouldn't normally buy, and people get FOMO because they start to think, holy, we're going to miss out if we don't buy now. And then they buy something in an area they're not familiar with, or it's something that they didn't want. They just had to get into the market. They just said, we'll buy this, we'll sell it in maybe 5 years and then move to a bigger place, or whatever their thought process is. So the thing is, though, once the demand runs out, or if interest rates go up or anything like that that could negatively affect demand, but right now I'm just going to talk about organic demand, so demand that is actually just gonna wane eventually, just like it does on stocks, just like it does on any asset. Like, there is only so many people willing to buy. And despite what people think about immigration and stuff like that, we're talking about places that aren't really affected by and large by immigration. And this is why I've picked these places like on Vancouver Island to talk about. So the interesting thing about that is going to be that you will see declines happen quickly because people will reduce the price. Now, why will they do that? Why will they reduce the price? Well, the fact is that they own at a lower price. So they bought at a lower price. And that means that they have more equity in their home freed up. They can go down on the price much, much quicker. Now, remember, people have normally, anyway, a reason to move. So they have a reason to move and they actually want to move. It's not usually the case that people are putting their house on the market just because they want to, see what they can get or anything like that. Generally, it's because they're either moving up, moving down, or they just want to move in general to a different area. And when that happens, when you see that, basically that means those people have a reason to move, they have a reason to sell, and you'll start to see them reduce the price if there isn't enough demand. And when demand starts to go down, you start to see prices slide anyway. Like what we've had in Calgary, for example. What we've had in Calgary, which is one of the weakest markets in Canada, is we've had prices that are going down even though the supply is still very, very limited. And the fact is that the demand is going down, and the demand that is there is getting more and more picky. They're getting more and more wary about what's going on in the market, and they're thinking, and you're getting more and more people that are holding off and they're saying, we'll wait for something to come along rather than jumping into anything. And the fact is that when that starts to happen, you'll see people start to drop their prices, and those people, which is most of the market here and in Windsor and everywhere else, they own the houses at a lower price, so they can drop the prices. They're more likely to drop the prices quicker. Let me explain a little bit about psychology of prices. When we see people who buy houses, I've seen it in Calgary a million times because Calgary is a weak market, where people have bought like 12, 14 years ago, and they've bought at said price, let's say $500,000, and they come in and they try and sell it for $575,000, even though it's not worth it. And then what happens is the price comes down and down and down until they get to that $500,000 number or close to it. Now, they don't even realize that adjusted for inflation, they are way negative on the house anyway, but they just want it in their mind to be breaking even on that house. Even though they're not, they're actually negative. They don't want to sell for less than they paid for it. That's a lot of people's mentality, and that just happens. So the thing is, what you'll have is people with so much equity in there, they're like, yeah, drop the price 50 grand to sell it, we need to go. And you'll see prices go down very, very rapidly, and that will happen quicker than most people expect. And that will drag in a lot of fear, because those people who FOMO'd into the market are going to be sat on the sidelines going, holy crap, like what are we going to do? Because we were going to move up, we're never going to sell this place now. So maybe look at selling it at a loss. You may see that happen. You're going to see investors who bought using home equity lines of credit and everything like that. You're going to see a crisis that Canada has never seen. And it's going to expose the flaws in Canada's financial system, which quite frankly have been there for a long, long time. They've been there since we moved, for certain. And there's something that I've always questioned, home equity lines of credit. You don't really see that in the UK. You only really see that in Canada and the US, people using their homes as essentially ATMs. And you don't really see that in other places in the world. The funny thing is, the UK used to do more home equity stuff. You could get home equity lines of credit, but that all disappeared after the 2008 crash. I wonder why. And people just don't realize that these things, they are not there for a reason, because people get greedy, people take advantage of them. Like, people are making serious money flipping houses and doing stuff like that, I'm gonna tell you. And that invokes greed, and those people, they're not wired for investment. If you're an investor, you have to be wired in a certain way. When I go to trade financial markets, I realized a long time ago that you need to be very consistent. You need to be able to take a loss and not get emotional about it. And do you think people can take a loss after what I just told you about people? They want to get that break-even number. They won't sell for less than that break-even number. But what happens if the average prices then reverse way below that? That's exactly what can happen, and that's turning a small loss, which you can cut, into a big loss, which you can't cut, and you could be waiting years for prices to rebound back. So the fact is, guys, there are a lot of things which people need to bear in mind, and this time right now, we're in a precarious time where things are just kind of starting to turn a corner, I would say, but we're definitely seeing things starting to turn a corner, and I think that's going to continue. I do think there's going to be an inflation scare, and if you haven't seen, watch my other video on the inflation scare. But anyway, guys, I'm going to love and leave you, and from here in a beautiful Parksville, it's just coming up to 8 o'clock in the morning. It's absolutely beautiful morning here. But anyway, guys, from Rathtrevor Provincial Park and this amazing low tide, I will see you in the next video. Take care. Peace and love as always. Bye bye.